All right, awesome. I'm going to go ahead and turn off my camera and we're going to get started. So first and foremost, we're going to check the news as always. Forex Factory is the website that I typically go to, but you can also use finviz.com. That's FINVIZ, which stands for Financial Visualizations. If you are more of a visual person, you'll be able to see a little bit clearly if the market is going up or down at the time. But for now, we're just going to stick to forexfactory.com. So as we know, we have three types of folders. Yellow folders are basic news, basic impact news. Orange folders are medium impact news, and red folders are high impact news. Now, I always encourage people to stay away from red folders just because the market can be extremely volatile. But once you become more comfortable and you become a more confident trader, you are welcome to trading red folders because you'll be able to find more aggressive entries and the market will move very quickly in the direction after reversal. So, of course, today we're going to be looking at the Euro USD. We're also going to be looking maybe at GBP, JPY if we have any time. But if you guys do have any pairs that you want me to analyze for Forex, you can drop those in the chat as well. So I don't see the time is 7:15 p.m. I don't see any news around the pairs that we typically trade on session. So AUD is a red folder from 10:30, so that's fine. Just a reminder also, y'all, it is NFP week. So NFP week is the first week of every month. And this is typically when there's a lot of high impact news coming out in general. So although you may find some pretty good trade setups, you may also find that you're getting kicked out of your trades or stopped out more often simply because the entire week is volatile. So if you wanted to just practice in your demo account this week, that's completely fine. Or I would just say be extremely careful, lower your risk, and trade appropriately because you don't want to blow your account. There are some really big traders who have lots of money and they still end up taking a lot of losses in NFP just because that's just the nature of the market. One more announcement, guys. You may want to consider looking for another broker if your broker currently is KOT, simply because KOT is it is based in the Virgin Islands and they are doing a crackdown on unregulated brokers. So if KOT Forex does not produce their licenses by Friday, March 10th, they do have the potential to be shut down, which means that if they want to keep your money and not give it back, they can completely do that. I've been looking at a few brokers myself. So once I figure out what I'm going to do, I will be more than happy to share that with you guys. But again, you have the liberty to do your own research. But I just want to let you know that you don't end up losing your money if you do have money there. They could, in the best case scenario, they could produce their licenses and everything will be fine, but it's just unregulated. So yeah, moving forward. Moving forward, tradingview.com. I know, Kayla, that's what I said. Wow. Wowzers. So I definitely have been looking at other brokers like forex.com, Interactive Brokers, IG are all three that I'm considering right now. And like I said, I will let y'all know. So we're going to be using TradingView. Of course, TradingView is a simple platform that allows you access to look at the markets. Of course, you can just click on the screen and choose the pair that you want to search. So I click on the screen and I type Euro USD and I'm going to click Launch Chart. All right, now let's clear all this stuff off the chart and we're going to start from scratch. So as promised, like I said in the email, we're going to just be looking at some different ways that we can find entries because everybody doesn't trade the same way. So it just makes sense to show you guys other ways to trade so that you can find a style that works for you. Now you can do one of these, you can do none of these, you can do all of these, but I highly encourage you to at least test them out. And if it makes sense to you, of course, just drop an MS in the chat as I'm explaining. So for the last couple of weeks, we've been using this strategy, the double EMA and MOM strategy. And it's just pretty straightforward to me because I see everything that I need to see. Now, just a simple recap. We know that if we're looking for a sell and the market is bearish, meaning it's going down, we're looking for a couple of things before we get into that trade, right? We're going to be looking for a red candle, right? So we have that here. We're going to be looking for some liquidity or 3 to 4 wick rejections, which we also see. We're going to be looking for the candles to fall under both EMAs, which we see. And then we're going to want to see that cross down on the momentum indicator or it facing down. So once you have all those things, you should feel confident to take the trade. If you still don't feel confident after seeing all those things, your entry signal, right, outside of your confirmations can be, we're going to see the market consolidate and da-da-da. Then we see a break of structure, right? And the break of structure literally just means that the market was consolidating. There was clear consolidation here, right? There was clear consolidation where we see it go up. There was clear consolidation. We see it go down. There was clear consolidation. We see it go up, down. And then we see that instead of it deciding to just stop right there where it previously stopped, it created a new low. And that break of structure gave us our entry signal to actually get into the trade. Now, that is for a sell example. And I'm going to review a buy sample really quickly and then move on to the next way that you guys can look at the market. So when we're looking for a buy, and I'm going to draw these lines here in advance. When we're looking for a buy, we want to see a green candle, right? A strong green candle, preferably a candle with a lot of body, letting us know that the buyers are in control. There's a lot of momentum there. The second thing you want to see is that the candles are above both of the EMAs, telling us that price is above average. So that's 2 confirmations for a buy. The third thing you're going to want to see is the momentum indicator is facing up, and definitely above. If it's facing up, that's like, okay, it's a sign that it's buying. But once it has actually crossed up or it's above 0, which is this dotted line, that is another entry signal, right? Confirmations are different from signals. The confirmations just let you know this is the way that the market is going. The signal lets you know that it's okay to get into the trade. So, of course, we had some consolidation here, right? We see the market was stopped right there. Then we see it came back down. Then it was stopped right there. Then we see it went up. It was stopped right there twice. And then it came back down. And then what do we have? We have a break of structure on the upside. And that was our signal to take this trade for a buy. These drawings are ugly, but we get the point. So if you guys are comfortable and you understand the double EMA and momentum strategy, just drop some 7s in the chat. And the next thing we're going to talk about is the Fibonacci retracement tool, right? Because Fibonacci is a great way to look at the market. So the Fibonacci tool is a free tool that you can use on TradingView, and you'll find it on your left panel over here. If you click the 1, 2, 3rd one down, it'll actually be the first one, and it says Fib retracement. Now, what you're going to want to do is you want to connect the most, not the most recent, but the most obvious. So we're going to use this line, the most obvious swing low, which is here. And you want to connect it to the swing high, which is there, right? Now, if you're looking for a buy, the 100% should be at the bottom, right? If you're looking for a buy, the 100% should be at the bottom. And you want the market to retrace down to the 3820 line, because the Fibonacci pretty much has these different levels. There's 100, there's 70, there's 6180, there's 3820, and then there's 25. You'll notice that every time the candles retrace to this, technically every level is an entry, right? And if you see the candles retracing their entry, you're like, okay, I can get into this trade. But when the candles retrace to the 3820 level, that is a potential place where you can get in for a buy. So you can put a line right here, a horizontal line, and then you can use that as your buy limit to set a trade for the future. Now, this is the market that's currently in motion, but I'm just going to go back to a past example. We're going to do a buy example, and we are going to click our Fib tool. We're going to click the bottom, the most recent swing line. Oh, sorry, wrong tool. The most recent swing low to the most recent swing high. And then what do we see here, guys? We see that once the market hit the 3820 line, right, that was a confirmation to get into the trade, and then the trade actually did take off. Or if we want to even move this over here, right, we have the swing lows there, then we have a swing high there. Again, the candle has broken or crossed or touched the 3820 line, And again, that is a confirmation for a buy. And vice versa. It'll be the same thing for a sell. So let's look at this. Now, when you're using it for a sell, you want to go from the swing high. Oh, sorry, y'all. You want to go from the swing high, right, to the swing low. And it's going to be the same thing. Once you see that the candle reaches the 38.20 line, that's going to be additional confirmation to get into the trade. So in this case, we have a bunch of confirmations. We have the red candle, right? We have it below both EMAs. We have the MOM facing down. And we also have the retracement at the 38.20 letting us know, okay, this is a cool place to get into a trade. I'm going to set my entry point there, or I'm going to wait until the market gets back to that point for me to get into a trade. So let's do it again. Again, with the current market where it's currently at, you could be looking for a sell or a buy, but because I see a swing low right here, I'm going to click it. I'm going to drag it to where the market is. And what I would do is I would set a buy limit trade right here. And buy limit just means that, let's just say the market is going up, right? A buy limit means that price is going to come back down first, right? In this case, come back down to the 38.20 before it goes up, right? That is a buy limit. Price is going to go down before it goes back up. Versus a buy stop would be prices here. Our entry would be here, and our TP would be here. So instead of expecting the market to go down before it comes back up, we just expect the market to keep climbing and to keep this upward momentum, right? So that is one way to use the Fibonacci. And again, I'll just do another example, another sell example, and another buy example so that you guys can see this tool is extremely easy to use. All you have to do, again, for a sell, click the swing high, right? Because we're going from the top to the bottom to the swing low. And we literally can see how many rejections on the 38.20 line, right? If you guys can see the clear rejections at the 38.20, you can see, and again, of course, like we talked about in our HFX class last week, if price breaks past the 38.20, where is it going next? 61.80. If it breaks past 61.80, where is it going next? 70. If it breaks past 70, where is it going? 100, right? So I like this indicator / tool because it gives me several different entry points. And I always know that 38.20 is the strongest. That's the one that I used when I was using the Fibonacci a lot. But as you can see, you can use any of these levels as entry points. And again, for a buy, just so we can see it again, we go swing low, swing high, right? We have the market actually breaking the 38.20 line. So if it comes back down, or if it breaks it, or we can even go higher, right? We can even go higher, and we can see that again, it's come down to the 38.20 line. We still have a lot of momentum there, right? We also can see it touched and broke the 38.20 line again, and then it still continued to go up. So if you guys understand the Fibonacci, just drop some sevens in the chat, right? Because it's as simply as connecting a high point and a low point. It's really that simple, right? Now, again, you will be able to watch this video again, but that is another simple tool that you can use to help you find your entry points. Let me put this on hour just so I have more things to see. All right, so we're gonna move on to the next thing that we can use to find our entry points. And if you are in IM Academy, then you're going to recognize this tool. It's called the XABCD tool. And this tool pretty much, again, all you're doing when you're using any of these, and they're called pattern tools, right? Because the market is based on patterns, and we don't really need the tools to see those patterns. We can see it with our naked eye, right? We can literally see the markets going up and down. It's creating these M's and W's at all times. Now, again, the next tool we're going to go over is the XABCD tool. which is another pattern tool that you can use to find entries. So if you wanted to find a buy opportunity, right? What you would do is you would start from the bottom, right? Whenever you're looking for a buy, you start from the bottom because you want to see the lowest price has been, because that's going to be your entry. So when you're using this tool, you want to start at obvious swing low. This is a pretty swing low, right? A pretty low swing low. So you want to click there. That's going to give you your your X point. So you go from the bottom to the tippity top, right? Then you go to the next bottom. Then you go to the next tippity top, right? Then you go to the next bottom, right? Now, if you remember from IM Academy, when the D is at the bottom, you buy, right? And you can even use this one too, right? Because as long as you're looking for a buy, so remember, you're looking for a high, a higher high, and a higher high, right? And let me just move this out the way for a second, right? So we can see that this is a low, this is a higher low, this is a higher low, this is a higher low, letting us know that the market is going to be going up. So I'm going to put this back here. So again, this tells us the same exact thing. And let me just put this horizontal line here, right? So that we can see that all of these tools are telling us the same thing. You start from a low, and then you go to a high. Then you go to a higher low, right? As long as this low is higher than this low, that's fine. And then you go to a lower high, right? Same thing. And then you have another lower high. So again, a potential entry for a buy limit order, which means that, again, price is currently up here, but we expect it to come back down to the D before it goes up. That will be considered a buy limit order. And this is the XABCD tool. And the same thing for a sell, right? If you're looking for a sell, right? And again, it's better to use past price action for examples, simply so that you can see how this actually played out. So let's look for a sell example, and we're going to use this downtrend that was occurring right here. So we're going to click there. You want to start at the high this time, because remember, we're trying to see what was the previous high point, a potential place where we can sell. You want to go to a high. Then you want to go to a low, right? Then you want to go to a lower high, right? Because it's still a high, but it's lower than this high. Then you want to go to a lower low, right? And you can use this one. You can use this one. As long as it's lower than the previous low, you want to go there, right? And then we go, boop, right? And I'm going to just move this out the way for a second. We see that there was a high, price dropped. Then we had a lower high, right? Which means that it's still a high from this section, but it's lower than the first high. Then we had a low, then we had a high, then we had a low. Now, when I put it back, what happens once it reached another high? It actually sold, right? When the D is at the bottom, you want to buy. When the D is at the top, you want to sell. And we can see that's exactly what happened here, right? So I'm going to just keep drawing this out for y'all. I got to find a good place to buy. Let me turn this off real quick, y'all. All right, boom. So if we were looking for a buy, click your XACBD tool. You find a low. You find a high. You find a low, right? You find a high. You find a low. Well, it could be anywhere as long as it's higher than that one. And again, we did have a little bit momentum right there, right? Now, when you're using this tool, the higher the time frame, the better. So for example, if I put this on a 4-hour and I was looking for a buy, I'm going to click my tool. I'm going to say A, B, C, D, right? And then again, we have that buying motion there, right? And then the same thing for a sell. Let me just go back down to the hour. Again, for the sell, you do the high, the low, the high, the low, the high, right? It don't have to be wide, but the wider the better because you're analyzing more data. And then again, we did have that selling on the D, right? So when the D is at the bottom, you buy. When the D is at the top, you sell. And that's another simple way that you can use your trade. So if we look at this, we can see it looks like this market is going up, right? So if we were to use this for our trade example tonight, again, we would start here. It would come here. We would come here. You can go there. You can go there, right? And then you can say if the market comes back down to this point where the D is, you can get in for a buy. So you could potentially set a buy limit down there. So again, that's a pretty simple tool that you can use. So far, we did the Fibonacci, right, which literally gives you levels where to get in. All you have to do is be patient. So let's just say we were going to use the Fibonacci for where the market currently is right now. We would click it. We would click the most recent swing low. Then we would just drag it up to where the market currently is. And we can see literally the market came back down to this level, right? Probably the market opened at what, 5 o'clock? This is a 1 hour chart. That was 3 hours ago. The market actually started near our 38.20. So if we would have analyzed the market before it opened, and then this green candle would have been at this level, we could have taken that trade for a buy and already been in profit for the day. Now, if I add my EMAs back and the candles also have the confirmations there, look at that. We would have had everything we needed to get into the trade. So let me just confirm one more thing, right? Let me just put a vertical line there so I can see where my MOM line was, and it was above 0, right? So that would have been a really good setup, a really good entry. Now let's just also use this tool as well. One more time. Low, high, low, high, low. As long as it's higher than the B, right? As long as it's higher than the B, then again, you can use, like I said, you can use all of these things, one of these things, or none of these things, but they're all designed to tell you the same thing about the price. Where was the previous high? Where was the previous low? Where am I getting a lot of activity? Where am I getting a lot of rejections? What is going on here? Right? So we just going to hide our drawings, right? And we're going to move on to the next way. But if this is making sense so far, you guys, just drop some 7s in the chat. If it's not making sense, drop a question mark in the chat. If you have any questions, feel free to drop your questions in the chat and I will answer the questions, right? Because I just want to show you guys different ways to come to the same conclusion. Kayla, I know you're driving, but you're listening. All right, so if you guys don't have any questions, we're going to move on to a third way that you can look at the chart. Okay, yeah, definitely practice. I always say is no rush to get into the live market because you do have your demo account. And it's like if you knew that one good trading week or one good trading month could erase all of the losses that you've ever taken just by understanding this, then it's worth it to practice. It doesn't make sense to keep rushing and trading your live account, keep losing money if you aren't sure. I'm not sure all the time. And if I still have that urge to trade, I just go to my demo account because sometimes it's like we feel so excited. We think we have all our confirmations, but then we still are like, I don't know if I'm going to make money. If you don't know and you're not 100% sure, well, you can never be 100% sure, but if you're not 100% confident about the trade that you're taking, just simply take the trade in your demo to see how it's going to play out, right? It's the same market. You're just not risking any of your capital. So the third way that you can trade is, or that you can look at your trades is, hold on, let me find it, y'all, because it's just so many things up here. I'll be forgetting where some of this stuff is at. So the next thing that you can do is you can use a channel. Let me just make sure this is the right one. Hold on. Oh, yeah, so that's the right one. So you can use a channel, and the channel is, Let me make sure that's the right channel. Okay, we have parallel channel. I want the regular channel. Sorry, y'all. Give me 1 second. All right, so what's up here? It's under the same one as Fibonacci. So this category is called, I think it's just lines, but then you can click parallel channel. And the way you want to do this is pretty much if you, let me just look at a longer time frame. You want to go to the 4 hour. And let me delete this stuff off the chart too. And the channels are also pretty simple to use. I'm just trying to get this stuff off my chart. So with a channel, what you want to do, if you're looking for a sell opportunity, first you select channel. You want to click at the top. Then you want to drag it to, basically you want to be connecting these higher lows that are here. You just want to be connecting them. So you can drag them all the way down. As long as it touch at least 3 is valid. And then you want to drag your channel to cover the candles. Right? So I'll just do it one more time. You want to click on the channel. You want to click a high point, right? A higher high. You want it to touch at least 3 other higher highs, right? Once you click it, you drag it downward so that it covers all of the candles that you can see, right? All the candles that you can see. Now, again, this is one of the easiest things that you can do, that you can use to get into your trades. And it's as simple as this. If the candles are within the channel, right, they're trading within the trend, right? Once you see the candles reaching the top channel line, which is here, that's going to be your place to sell, especially if the candles break out of that channel. That's letting you know that price is higher than it not should be, but price is higher than it typically is. So it's going to continue to sell. And as we can see, we got a huge rejection off of this wick. And look at this, within the channel, we see all of these rejections rejecting off of the channel. And then vice versa. Once you see that the candles are touching or close to the bottom line of the channel, like so, that's going to be your indication to buy. And typically, once the channel starts to break out, again, that breakout candle is so important. We have a breakout right here. Once the candles start to break out of the channel, it lets us know that the trend is probably going to change, and we can see that's exactly what happened right here. So that's how you do a channel for a sell. You click the highest high. You make sure it touches a few other high points going down. You drag it down to cover all of those candles. And that will give you a good idea as to, like, it's so much easier when you can see what the market is doing and when you don't have to guess. And typically, like I always say, whenever candles are between 2 lines, that top line will be the resistance, that bottom line will be the support, and the same thing for the middle line. If we look, let me just zoom in for y'all. If we look, ooh, I love this. This looks so much better, bigger. So we can also see this middle line here, right? But a lot of indicators that have a resistance and a support built in, they'll always have this middle line, which is kind of like an average. And you can use that as support and resistance as well, because if you notice, the candles haven't quite reached the top channel line, but they reached the middle of the channel line and it's still rejected, right? And the same thing over here. It didn't quite reach the bottom line, but it was close to the middle line and it still bought. Here, same thing, close to the middle line and it still bought. Close to the middle line and it still bought. Now, this would be a nice trade for a buy because, say, for example, we would have gotten down here because we see the green candle touching the middle channel line. And then we also see the MOM, which is crossing up. Now, even though the candles aren't quite above the EMAs yet, that still would have been a great setup for a buy opportunity. If that makes sense, just drop some sevens in the chat if you can. And I'm going to show you how to use the channel for a buy. Right? It's literally the same exact thing, right? Except it's the opposite way. So for a buy, you would click. Hold on, I need to make this a little smaller. So for a buy, you would do the same thing. You would click on your channel tool. you would click the lowest low, right? Or where you see liquidity, same thing. I'm literally telling y'all the same thing we always talk about, but in different ways. So you want to make sure, because this is technically a trend line, right? You want to make sure your trend line touches 1, 2, 3, right? Or even here, if you want to go up here, and you don't want to force it. If it's not touching it, it's not touching it. So this is a huge analysis over a long period of time, but we have 1 touch, 2 touch, 3 touch. So you want to click. Then this time you want to drag the channel upwards and make sure all of your candles are in there. And let me just make this smaller so that everything's on the screen. All right, so again, we can see the same thing happening here on this indicator. We can see, I need to zoom in, y'all, sorry. We can see the same thing happening here. We can see once the candles get close to that bottom line, right? Because that's the line we're using as our support. We can see we got a great, not only did we have liquidity, right? Now, let's just say we were only using the channels. And let me take the EMAs off for a second just to show y'all. It's a lot of different ways you can do this. So let's just say you ask yourself those trading checklist questions. So let's say you say, do I see liquidity at the bottom? Yes. Do I see a green candle? Yes. Is my MOM facing up or above 0? Yes. Now, additional question, is my candle near the bottom of the channel? So we got another yes. So we got 4 yeses. And remember, like the trading checklist said, you need at least 4 confirmations to want to take that trade. We would have got into that trade and we would have caught all of these pips. And that would have been absolutely amazing. Now, vice versa. Let's just say we're not using EMAs. We're only using the channel. Questions. Do I see liquidity? Yes. Are the candles under the top channel or middle channel line? Yes. Is my MOM facing down, right, or below 0? Crossing down or below 0. We got it right here. My circle's a little big, but it's right here, y'all. We say yes. We take the trade, right? And we take the trade. And again, this should not be hard because you know that your entry point is going to be here. You know that your stop loss should be at the previous high, 5 to 10 pips above the previous high. I typically do about 20 pips just to be safe. And if the trade is being a little sketchy, I'll do 30 pips, but 30 pips, in my opinion, is unnecessary. And unless you plan on staying in your trades for a long period of time, 30 pips is a bit much, especially when you don't have to risk that much capital. So set your stop loss at the previous highest high, right? And set your TP at the channel line, right? It's that simple. Set your TP at the channel line. So I really like this indicator specifically because it's literally built in. Like everything is built in for you. All you have to do is ask yourself the confirmation questions and get into the trade. And again, we have rejections, right? We have 3 rejections. We have liquidity. We have it under the middle channel line. We have this down and facing 0. We have all of these pips, right? That's amazing. Now, again, we have rejection, 2 rejections. We have liquidity there. We have it near the bottom channel line. We have our MOM way above 0, which is great for us. What do? We set our stop loss at the previous lowest low, right? We set our stop loss at the previous lowest low, 5 to 10 pips, which would be around here. And then we can set our TP at the middle channel line, right? Or at the previous high, which is here. And again, TP would have been smacked, right? So the channel is extremely simple and easy to use. I highly encourage you guys to get into it, right? All of these things are straightforward. And when I first started trading, and I just really didn't know what I was looking at. I'm like, what the F is this? I just didn't know. Like, is the market going up? Is the market going down? I do not know. So these are tools that really help me put the market into more perspective and say, okay, what exactly am I looking at? Is this market trending? Is it between 2 channels? Is it near a specific level? Like, if you don't feel comfortable enough and you still find yourself being confused about where are these levels, right? Where should I get in? Where should I get out? These are great tools. Again, there's the Fibonacci tool, which gives you different levels. It gives you the 100, the 70, the 65, the 3820. I don't think I'm missing any, right? And you can, when you get into Fibonacci also, right? I'm just clicking anything. You can click on it and you could change the settings, right? Because technically, when you first add Fibonacci to your chart, it's going to give you all of these levels, right? And if I turn on these levels, you'll see them on my chart, right? It's going to give you all of these different levels. You don't have to just stick to the top ones, but I just go from 170, 60, 180, 3820. But again, you just got to find what works for you. We are not all the same. Hence why showing you guys different ways to trade, right? All of these are levels, right? All of these are levels, and the more levels you have, the better. It may make you more comfortable in case the market does break out of your zone. So let me take those things off because I don't want all those levels on my Fibonacci. But I want to show you guys that you can change your levels. And if you want to screenshot this, you can feel free to do that, right? And I'll drop this in the chat as well. The levels, I'll drop fib levels are 0. And again, I color code everything, all my stuff by the rainbow. So it's easier for me to remember. So that's why mines are these colors as well. But you can use whatever colors you want. You can use different variations of blue, different variations of green. You can use your favorite sports team. It's really completely up to you, right? So we got 0.382, 0.618, 1, which is 100, 0.25, and 0.70. So those are the fib levels that I like to use on my Fibonacci, because if y'all know anything about me by now, is I don't like a crowded chart. I don't like too much stuff on my chart. But these are great ways to learn. Again, if you're using the XABCD tool, it is better to analyze it over a longer period of time. The smallest time frame I would use is the hour, just because it's giving you insight into so much data at once. But just to review, that tool is right under your text tool. You click here. And again, you can use any of these actually. Like Elliott Wave it's all the same thing. It's just connecting those high and low points and giving you like, okay, where's the market going? But XABCD is the one that I was using when I was in IM Academy, because that's the one that came on the chart. So again, if you're looking for that sell, you go high, low, high, low, high, right? D is at the top, you sell. And when it was IM Academy, it looked something like this, right? It looked like that. That's probably what you remember seeing, right? It wasn't blue, but that's what it looked like, right? And again, I can't make this stuff up. All I did was connect some highs and lows. And if I would have done that, right, not only is the D at the top, because remember, and I'll drop this in the chat as well, D at the top, sell, right? D at the bottom, buy, right? So not only do we have the D at the top, we also have liquidity, right? That's another great way to know if we should sell. What do we also have in this area? We have our MOM crossing down and breaking the 0 line. Then we have all of these pips, right? And this is the 4-hour chart. So if you really have patience and you want to analyze your charts on a higher time frame, because you figure I'm too anxious to be a scalper, right? I'm risky, so I'm a scalper all my life, and I'm really trying to transition into being more of a swing trader to hold my trades longer. Because 20 pips is nice if you're using a higher lot size. That's really nice. So I'm at a comfortable place with my lot size, but I also want to just get more comfortable holding my trades for longer. But I just be like, nope, when it's blue, it's on you. Out of here, bye. Made my goal. But I'm grown up, y'all, right? We all gotta learn that, like, I'm not as patient as I should be either. But again, if I would have held this trade for 3 days, that's 146 pips, right? And that's pretty good. That's pretty decent, right? Because even if you're only using 10 cents, the smallest lot size, that's still what, $14, $15 that you made just from a 10-cent investment. That's pretty cool. My lot size that I use right now is around $2.50. So let's say I did take this trade on a Monday, and now it's on Thursday. 146 pips later, that's $365. All simply because I just had the patience to hold this trade. I had my confirmation, and I had my entry signal, right? So we got the Fibonacci, we got the XABCD tool, and then the last tool that we went over today was the channel, which you'll find right under the cursor tool. So you just click on it. If you were looking for a sell, again, you want to go for the highest high. You want to make sure it touches some other highs. So we have one there. We have one there. As long as it touches at least 3, it's fine. For a sell, you click it, you drag it to the bottom to include all the candles. And as y'all can see, this is telling us the same exact thing that the ABCD tool was telling us. We see a rejection, right, near the top parallel line, right? That would have been an additional confirmation to sell. Now let's turn on our EMAs. Look at that, y'all. I personally, if I would have came in here and saw all of these things at once, and we can even throw the Fibonacci on there too, but it's just going to make me anxious. There's too much stuff happening on the chart right now. But I'm just showing y'all that everything is happening and it's all telling you the same thing. So we would have had the channel confirmation, right? We would have had the ABCD confirmation. We would have had it falling under both indicators. We would have had liquidity, and we would have had the cross down on the MOM indicator. So we only need 4 of these confirmations, but we would have had 5, right? We would have had 5 confirmations, and we would have been in hella profit, right? Had we, right, used this strategy to take this trade. So those are the only 3 that we're going to go over today. Maybe once a month I'll introduce new strategies, but I just know that you can get overwhelmed when you're learning stuff. But the point is that you don't have to get overwhelmed. You could find out what works for you, right? You can just use the EMAs in the channel, right? You can use the MOM in the channel, as you've seen. As long as you're getting 4 confirmations via the questions, you should be okay, right? So I'm just gonna go down to the hour. I'm gonna reset my chart view, and we're gonna look at Euro USD for a potential trade idea for the week. But before that, if this was helpful and you guys learned something new today, just drop some 7s in the chat. Because yeah, I figured just because something works for me, that doesn't mean that it's going to work for everybody. And I know personally, I've gone through a lot of different trading styles and a lot of different indicators just with being an educator and having the understanding that every student is not going to learn the same. So I've literally used all of these things in my trading, and I've had success with all of them. But personally, just based on my trading style, I just want something that's direct. I need something that's going to tell me the trend, which is important. I need something that's going to tell me the momentum, and I need to see my break of structure. However, everybody's at a different stage in their learning journey, and it helps to know these things and to practice them and to really start to strip away what makes sense and what don't make sense, right? So that's that. So we're going to look at Euro USD, and we are going to use was TradingView updated? I don't think so. Maybe try just refreshing your page. I know TradingView was acting a little, it could be an update, but I'm not noticing anything different. But I do know that last week it was acting so glitchy, and I was just like, what is happening? Like, I was talking to Google, like, why is TradingView glitching right now? So typically when programs start glitching and acting stupid, there is an update, but I don't notice any changes on my end. You're welcome. So we're going to look at Euro USD for a potential trade idea. I'm just trying to see if I want to use any of the new tools that we went over today, or if I just want to. Let me put this on the 15-minute because, yeah. Okay. Okay. So this market is actually going to continue to sell until it breaks this zone. That's about 15 pips. Is it worth it? You got to really ask yourself these questions. Is it worth it? And let me just look on the hour one more time. And let me put on my session breaks. There's another tool, y'all, too. If y'all want to use it, there, if you click your settings, and you go to appearance, they have session breaks. And session breaks pretty much is just like the different time sessions. So the London session, the New York session, the Australian session, and the Tokyo session. And I like using session breaks because it lets me know which levels the market is trying to break based on the previous session. Because what you'll notice is that the market will always come in and clean up the last session before it really get into what it want to do. And I'm gonna just show y'all, for example, I don't know what session this is, but we can see that this was a session here, right? And this was the high, and this was the low for this session because it's in between these two lines. Now, this session started, what happened? It immediately, well, not immediately, but it had to break the previous session high because they pretty much like, get that price out of here, get that price out of here. No, it broke the previous high. And then what happened in the next session? It broke the previous session high. So if I'm going for a buy in this session, I know I'm looking for the session to break the previous session, either high or low. So we can see this current session just started. Again, it started at 5 o'clock. It should be around 8 o'clock now because this is the hour chart and it's only 3 candles. So since it looks like the market is starting to turn around, right? It looks like the market is going to try to break this session low. And then it may even potentially break this session low and this session low. Technically, it does have to come down and clean up all these people. And it could do it in one shot. Like, I know you guys have seen those crazy big candles that just randomly seem to come out of nowhere, but they're not coming out of nowhere. They're just coming to clean up the previous session highs and lows. So let me just see if I could find a big candle really quickly just to give you guys an example. Because sometimes you'll have one candle that'll take out the session high and low. Like, it'll take out both the high and the low from the previous session because it's just gangster like that. So let's see. I don't really see any huge candles now. However, I know you guys know what I'm talking about. This is a crazy candle right here. This candle specifically took out this. It took out the highs from all the previous sessions. And then what happened? You probably thought, oh, my computer's gonna die. Hold on, y'all. So, for example, this is a good example, actually. Like, let's just say you saw liquidity right here. You like, ooh, liquidity, bop, bop, all that stuff. And then you think the market's going to sell. Then you have this candle that comes in, disrespects everybody just for it to continue to sell. Like, that actually is such a pet peeve of mine when I get stuck on those candles. I love when I get big candles like this, but I absolutely hate when they don't go in my favor. So that's just a good way to use session breaks. Here's another great example. We had the low for the session there, the high for the session there. We see because the market was trending down, this session came through and broke all those lows, right? So it's just another thing that you can use, and I like to use it when I'm setting my TPs and SLs. So what do I see happening here? I see, it's like, could you really consider this liquidity because it was in the last session? That's another thing too, but I would say yes. So we got that. I'm just really trying to determine, is it going to break the other high or the other low? Because it could also come right here and then go up, but I don't know. Your USD isn't really giving me what I want to see right now, so I'm going to just go to GBP JPY. And again, if I don't see anything, I'm not forcing the trade. I don't, it's, nope. No, thank you. So let's reset this chart and see what's happening here. Okay, so this market looked like it will sell all the way down to here. Like, it's going to sell all the way down to here, which is about 30 pips. So I'm gonna do GBP JPY for a sell limit trade. I'm not gonna, and we can see this huge big candle went crazy. So this market opened with a lot of strength. So I would probably wait until the market retraces back to maybe 163.45. And then set my TP down here, which is about 40 pips. We already had the liquidity up here. And I'll drop this in the chat. GBP JPY. And again, you guys don't have to take these trades. This is just what I see and what I'll probably be doing. So we got GPB, JPY, and this could be a potential sell limit at, because now we see that it's finding new resistance right here. And then we have all of this liquidity up here as well. So let me just, and I highly encourage y'all also to do your own analysis. And then I also feel like it's going to go up around 2 a.m. because that really just be happening. So. All right, y'all. So this is what we're going to do. I'm going to give y'all 2 sell limit options. So you can do your sell limit at 1.63 up here, 1.6364, 163.648. You can set a sell limit right there because we can see that's where it was liquid at, and we did have the push down. And it's already starting to sell. Or the second sell limit that you could potentially set would be right there where we see the new resistance is starting at, which is at 163. This is a second sell limit. You could take one, both, or none. GBP JPY 163 point, let's just say 450. So limits. And then I really want you guys to, I'm actually not gonna give you any TPs or SLs. I'm not gonna do that. You know why? Because I just gave you guys so many ways that you can look at this market. So I want you to actually, if you take this trade, let me know what parameters you put in, right? Let me know what your stop loss would be, what your take profit would be based on what you see happening in the market. Now you can use the strategies we've been using, or you can use a new strategy that we learned today. And I would really love to see what you guys come up with in the chat. I will drop the trade idea in the chat, but I'm not going to drop all of the parameters. But once my trade do what it do, I'll post my results, whether it's a win or a loss, to let you guys know how it played out for me. But I think that's all for tonight, y'all. Hopefully it was helpful. If you do have any questions, please drop them in the chat now. I'll give you about 15 to 20 seconds to drop your questions in the chat. And let me just go check on this one more time. Yeah, this John is gonna sell. But again, I want to see what y'all see. All right, so it doesn't look like anybody has any questions. I want to thank you guys again for coming. Just know that you can get points for sharing this session, or if you want to send me a actual review, so that I can share it with other people on Instagram. That's a way to get points as well. If you haven't subscribed to the YouTube channel, make sure you subscribe. That's an easy 4 points. If you haven't followed the Cosmic Club on Instagram, that's an easy 4 points. But yeah, I'll make sure I add up y'all points and let you know on Tuesday where you are. So thank y'all for coming. Thank you for participating, and have a good night.